Hey traders, checking in on the stock market today. Finally, after 2 weeks of slow grind, full bull control, we got fear today. That fear lasted about 30 minutes. It was very short-lived. We'll see if there's any follow-through, but it did establish some clear key short-term support levels to be watching for the rest of the week. So SPY lost the pattern of a higher low every day after 10 days in a row. You certainly wouldn't notice it by first glance because there was a significant lower wick and it was the second highest close in history. So a significant recovery. And if we zoom in, we can see the 5-minute time frame. The bears had control pretty much through the morning. We did hit 5-minute oversold a few times. We hit 15-minute oversold. So there was definitely morning weakness. Hourly RSI got right to oversold, but V-shaped bounce. So if we had more time in the trading day, we would have anticipated an hourly lower high and then a higher low and a tightening range. So we'll have to see where we open tomorrow. But a big drop and a V-shaped bounce. And in the end, we know we're just looking for a daily higher low on SPY, anything above 414.70. So bulls, fairly comfortable overall with how much space they have to work with to maintain the uptrend. And you know today's the kind of day where everybody's looking for consolidation and the bears said, finally, this is it. We got our pullback, and that V-shaped bounce definitely trapped a lot of bears who established positions. The weakness was most significant in XLF as far as our major sectors, but QQQ dropped hard as well. QQQ was holding on all morning just fine. We had a 5-minute equilibrium that broke bear, and this is the pretty much 30 minutes of fear. And what we did not see is all of our major sectors hitting the low of the day at the same time. It came close, it didn't happen. So we had inverse relationship between QQQ and XLF, and on this dump, XLF was seeing a bit of a bounce. And then QQQ, first 5-minute oversold conditions coming off the all-time high, and then just a slow bull grind the entire way back up, recovering almost the entire dump, but again setting up for the potential of an hourly equilibrium. So if we fail to break 360.48 tomorrow, we then watch for the bulls to try for an hourly higher low compared to 356.49. The bounce on QQQ happened off of the low of Friday. Low of Friday, 356.28. We held that support level by 21 cents as we had some extreme 5-minute RSI levels. That RSI dropped down to just about 21. So significant bounce. And bulls just fine overall. The daily time frame for QQQ, extremely strong. QQQ does not give us the information that it used to as far as just saying tech and growth are strong if QQQ's green. Because now we're seeing inter-QQQ rotation, where the past couple days, growth has consolidated. I'm talking ARKK. Let's look at them. So ARKK, consolidation for 3 days, lost the pattern of a higher low every week. That was intact for 7 weeks. That broke today. Biotech sector, higher low every week for 7 weeks. That broke today. Biotech sector has been consolidating. Other growth names, NIO had the pullback to end last week. Bounce happened today, but still not seeing the strength that big tech is seeing. So QQQ is running right now because Google broke out to all-time highs. And today was Amazon monster day. 2-day cup and handle perfection here. All-time high. Failed to break it. Bull flag. Monster move. And Apple is the other lead tech bull, and Microsoft. All the big major tech bull names are just ripping all-time high across the board for all of them, and that's why QQQ is remaining strong. So QQQ is green today, and you look down, and 70% of the market is red. But QQQ was green this morning because the most important individual names, Apple and Amazon, make up something like 19% of QQQ. So they can skew the outlook when they're having days like today, which are so different than what the broader market is doing. So this is when you need to really look under the hood and see what individual names and individual subsectors are doing, because Apple and Amazon were throwing off QQQ as far as QQQ being a gauge for all these other names. So, big tech. The question that I have now is when big tech consolidates, Apple, Google, Amazon, and Microsoft, when they consolidate and look for a daily higher low, number one, you've got your back burner trades, first hourly oversold conditions. For some of them, you got first 5-minute oversold conditions to be watching for a day trade if we're just looking for an hourly higher low. But we'll be watching first hourly oversold conditions, and we'll be watching to see, does that mean big tech drops and we see growth names drop with it, or does big tech drop and growth names see capital inflow and just rotation? So that's something we need to be watching for as well. No sign of that daily consolidation, but we know it will be inevitable eventually, with, again, tons of space for a daily high or low. I anticipate bulls will be eagerly awaiting Apple's first hourly oversold conditions after this significant bull move, and certainly Amazon after the monster run that we saw today. And no indication that Amazon is done. It hourly bull flagged while QQQ dumped. Financial sector, unable to confirm the daily trend change. Very healthy consolidation, tried the bull flag, we double topped, and then we broke support. So we had a clear bear break there, and now on the weekly time frame, it is essentially a bull break with zero follow through, and now we're consolidating again. So the most important support level from here is 35.18, and I'd be watching, if we condense it to the 2-day time frame, it's essentially just all-time high, low of the dump, lower high, and I will be scouting a higher low compared to 35.18 to be the most likely result of this current pullback. We still have a good amount of space, over 3% before that level comes into play. Healthcare sector, daily inside bar, but a strong close. Healthcare has been bullish the last few days, helping the broader market. If the inside bar breaks bear, plenty of space for a daily high or low. Biotech sector weakness, daily lower high, double top at 138.50 and 138.60 to end last week, and now a bear break of support. I'm still considering it a double bottom because we only broke support by 16 cents, but if we see red tomorrow, it's a confirmed daily downtrend into weekly consolidation, keeping in mind on many of these growth names, we have not confirmed weekly trend changes, which will be needed if these monthly bounces are going to make it to a 50% retracement and shape up an equilibrium. So we have to confirm a weekly trend change to the bulls if these monthly bounces are going to follow through. XLE, daily equilibrium bear break. XLE has been showing us relative weakness comparative to oil, the commodity, and natural gas, the commodity. And now that those two commodities started consolidating today, it really led to a big red day for the energy sector. Daily rising wedge bear break, daily higher low bear break. 52.29 breaking would confirm that the bears have momentum in their favor, but overall the weekly time frame looking a little bit toppy. 52.29 and 51.18 are two key short-term support levels. The question now is, how much consolidation does oil and natural gas see, which we'll look at here in the end of this video, but the bears were ready and waiting. Just like the XBI bears, I'm going to go over a trade review here at the end of this video, but we knew that the XBI bears were positioned well for any broader market consolidation. Because again, at that point in time, we had already pulled back pretty notably. We had bounced and just were looking for a daily lower high. We closed fairly weak on Friday. And all of that with SPY in complete control of the bulls. So what happens if SPY starts any consolidation? The bears are positioned well on XBI, which is what we saw today. I guess while we're on that note, we might as well. This was the morning rundown. Watching XBI for bears who are positioned well for any broader market consolidation. We know XBI has not seen weekly consolidation in 7 weeks, and the daily higher low Thursday lacked any follow through on Friday. Aggressive bears scouting an entry, and then again, it was the broader market weakness that followed through with that. And as soon as we broke that low of Friday, our daily lower high is now set, and the bears are on the verge of confirming a daily downtrend into the weekly consolidation that we knew was overdue. SMH, daily bull flag still possible. Inside bar broke both directions, but still holding the daily EMA 12. So no red flags on the SMH consolidation at this point. Other name that we were watching, one part of the morning rundown here. NVDA first gap open in a while after none last week will have us watching for a potential similar scenario to NIO last week where the gap up indicated a temporary top. So it temporarily indicated a temporary top, but look at how similar these setups were for NIO and NVDA. So NIO ran real hard all week last week, no gap up on any of those big bull days. And then we gapped up and that marked the top. And on the gap up open day, We gapped up. We saw profit taking first thing. We then saw first 5-minute oversold conditions into a bounce, into a new high of the day, and then we rolled over and the bears controlled the day. NVDA today had a gap up open, a pullback first thing into first 5-minute oversold conditions, a bounce to a new high of the day, then a 5-minute equilibrium, and then we rolled over. At that point in time, we became very correlated to QQQ, and this drop here was because QQQ was dumping, and then we V-shaped bounced with the QQQ bulls. So in the end, the morning setup was the exact same setup as NIO. And that's worth noting because if you're looking at a lead bull and we have a gap up open that you're looking to mark a temporary top, you need to be prepared for first 5-minute oversold conditions, which people are going to be buying for the back burner trade. Because both of those names, NIO and NVDA, if you just use the high of the day as your stop, you stop out right before the bears roll over and take control. So wiggle room is needed. And that's an example on both of them. The biggest difference between the two is NIO closed weak on its gap up open day, and NVDA had a significant bounce here. We are just watching anything under 833.68 as an hourly lower high, but it is definitely a more impressive bounce than NIO saw on its first day of consolidation. TAN, daily is still extremely healthy. Key support is now 86.71. If we're going to see weekly consolidation, we must see a failure to break the high of 93.49 and then a bear break of 86.71 to confirm a daily lower high and lower low. And that's the same thing we're watching for NIO. NIO set a daily higher low, strong day today before the market weakness showed up. If we break this low of consolidation of 48.53, we're going to be shaping up the potential of weekly consolidation. So these names that have a lot of space to work with initially to maintain the higher low, if we then fail to break the high and roll over, that shows us a shift in the trend. So we're watching for that on both NIO and TAN if we fail the recent high. MSOS, daily trend change confirmed with zero follow through is definitely a red flag. That is not what you want to see. It started great. Big volume, green day, daily trend change confirmed into zero follow through and multiple days of consolidation. And again, it's just bad timing where if you don't have a good bullish correlation with the broader market and you're struggling, as soon as the broader market starts consolidating, that can ruin the hard work on any setup. So haven't lost the higher low yet of 39.33 support, but definitely not the ideal start to the week, as we struggle to correlate with the SPY bulls on the way up, but we certainly correlate with them on the way down. 42.06 still a very key resistance level on MSOS. Bulls need more. The VIX broke daily resistance of 1731 bullish, but all three of our major sectors were not at the low of the day at the same time. We saw significant bounces, which have resulted in a significant upper wick. We are looking for an hourly higher low, and then we'll look for an hourly lower high. Again, it was just one day of initial fear after 2 weeks of sunshine and rainbows for bulls, and we have to see follow through. If bears don't break the lows of today on QQQ and on SPY, either tomorrow or Wednesday, or I should say tomorrow or Thursday, then bulls remain in absolute complete control. And I keep seeing tops calling of tops of the market. And again, give me all major sectors at the low of the day at the same time and give me 2 red days in a row, and then we can talk about it. But until that happens, it's a waste of breath. The dollar, daily higher low set 92 and headed back up to our recent high. We're just watching the daily uptrend, keeping in mind that anything under 93.44 is just a daily lower high, a weekly lower high, and I'm watching, and the most likely scenario in my opinion is a weekly equilibrium. So I'm watching for a lower high compared to 93.44. And we have to lose the daily higher lows for that to take shape. With the big bounce in the dollar today, the metals have big upper wicks. Big bounce follow through, but we must confirm daily trend changes from here, and the bulls certainly want to see the dollar lose the daily uptrend. So if the low of today breaks tomorrow, top of the bounce is set, daily consolidation underway, bulls must confirm a daily trend change for weekly bounce follow through. If we don't, it's a weekly bear flag. Silver, same deal. Daily consolidation already underway, must hold 25.52 and break 26.77 to confirm a daily trend change. If not, it is a weekly bear flag. Miners, double top resistance, 35.18. We gapped up and rejected 13 cents from that level. Daily lower high pattern still intact, even though the metals broke the daily lower highs. Oil, still daily EMA 12. That's been holding for 6 weeks at this point, 5 weeks. 4 hour, we'll have to confirm a downtrend with a lower high and lower low. And one of the patterns that I drew this morning, pre-market on the live stream, and the commentary with it is, I've drawn a handful of rising wedges on oil, and out of the last two, one broke bear and one broke bull. And this one today certainly broke bear. This was the rising wedge we were watching this morning. Very nice follow through. I believe this was the last one that we saw that did confirm as well. So we have to see bear follow through with a confirmed 4-hour downtrend and a loss of the daily EMA 12 if we're going to be looking at this as notable. So energy sector bears that got their signals today on the equilibrium and the rising wedge breaking bear certainly need more follow through from the oil bears if they're going to be comfortable. And technically speaking, anything above 71.97, bulls are still just fine on the daily. Natural gas, double top at resistance, and now we're watching support. So all I care about on natural gas until one of these levels breaks is 3.567 support and 3.80 resistance. So a bull break with zero follow through, a support test that held. If this support breaks, it's a shift in short-term momentum to lead to potential weekly consolidation, which again, energy sector bears want the commodities to start showing weakness as well, so they have some wind at their back on the drop. So other than that, again, Amazon, just an absolute lead bull today. Trades that I took today, so started with some oversold bounces, and the first trade I took was NIO playing off the low of the day. So we had low of the day, high of the day, and a big drop. And it was a waterfall drop. So the first thing I did, I look at this pullback and I say, okay, I might want to bottom fish the low of the day. And then I zoom in. Is the 2-minute time frame a waterfall drop as well? The answer was yes. Okay, I'm interested in that play. 49.18 is the low of the day. I'm going to make one entry at 49.50 to start scaling in. I'm going to make a second entry just above 49.18. I'll put my stop probably under 49 because I like to give NIO wiggle room in both directions, whether I'm short or long, because it loves to break levels right before reversals. So how it played out is I got my first entry, 49.50, and then Tesla got my attention, and I got distracted. So I shifted my game plan because at that point, Tesla was crushed on RSI levels, but Tesla had a target of the daily gap fill. And the daily gap fill on Tesla was 657.20, and on this waterfall drop on Tesla, we got within 38 cents, and then people like myself front ran that gap fill. So as soon as we got real close, I made my first entry. I think my market order filled at 6.59, and I shifted my game plan. I said, okay, I'm still in my NIO position. I'm not going to enter a second NIO position. I'm now focusing on this Tesla gap fill and looking for this bounce. And something that I struggle with is having multiple day trades open at the same time. Because once this Tesla bounce started to get going a little bit, I said, all right, I'm no longer interested in NIO. I exited NIO with a tiny win. And then I focused on Tesla because the capital I had in Tesla, I use larger position sizes on Tesla than I do NIO because NIO is more volatile. So I was looking at Tesla as being more important because there was twice as much capital in it than what I had on NIO. In the end, NIO was the bounce. V-shaped bounce, new high of the day, massive move. So should have not paid attention to Tesla, should have stuck to the game plan with NIO, and it would have been a big winner. In the end, it was a very small winner. And then Tesla, I ended up selling half on the initial bounce and then put my stop under the low of the day. And I let it play out. And I stopped out break even because at that point, I was then focusing on another trade, XLF. Oversold bounces galore. So XLF was crushed on the 15-minute RSI. So 15-minute RSI is down in the single digits. The hourly RSI was down at 15. So waterfall on the hourly, 15-minute. 5-minute wasn't as much of a waterfall, but it was oversold as well. So I said, okay, I'm watching for an XLF bounce. And this was at 11. And I was constantly watching QQQ and XLF at the same time because of their inverse relationship to each other. And I was watching, that's right, it was in this equilibrium. So I was looking for a bear break on QQQ to lead to the bounce in XLF. So, left my stop on Tesla at break even, said, all right, I don't really care about that anymore. And I started scaling in to XLF. And when I trade XLF, I use really large position sizes because it is a sector that doesn't have a ton of volatility. A 1% move on XLF is a big move. A 3 to 5% move on Tesla is a big move. A 4 to 7% move on NIO is a big move. They're all different. So for XLF, I use much larger position sizes. And the last time I traded an XLF bounce, it went well. It wasn't the amount of follow through I was looking for, but I used very large position sizes. You may remember that from a trade review probably a few weeks ago. So I made an initial entry at 36.15. I would have entered a second position at 36 if we kept dropping. We then saw this bounce start to get going, and the QQQ bear break that gave me confidence was at 11.45 and 12. And at that point in time, XLF, the bounce had already played out. So that wasn't really a factor anymore. But I just scaled out into this winner. And again, it wasn't a significant move at all, 0.6% bounce. But because of my position sizing, and it was 4 times larger, 5 times larger than I would trade on NIO, it was a day-and-a-half maker. So scaled out into that bounce, then came back from the computer at lunch, re-entered for the 15-minute higher low, sold half, so I could put my stop under the 15-minute higher low, break even, and then exited right into the end of the day, as we didn't get much follow-through over 36.38. So in the end, the lessons. Number 1, stick with the original trade game plan. That would have been the easiest winner, and I would have still had time to trade XLF later. So got distracted with Tesla, and I could look at that and say, I should practice being in multiple day trades at a time and being comfortable with that. Because when I'm in a day trade, I am focused on that day trade. Just laser vision, the ticker I'm trading, and then the things that it correlates with. And I could say, well, once I set a stop loss, I can just let it play out. And I can try and change that psychologically. But then the pushback to that is, if I'm exceeding all of my goals as a trader, doing it this way, focusing on one at a time, why would I try and multitask and get better at multiple trades? So I can make more? That would be greedy. I'm already exceeding all of my goals. How much more do I need? So for me personally, it's the same reason my brand new desktop still has not been used 3 to 4 months later, because if it ain't broke, don't fix it. And I'm not going to change anything until I need to. So that was my day. It ended up a green day, but some lessons mixed in there and as well. But some nice days for oversold bounces. I do still have some hedge positions in SPXS and SQQQ. And honestly, they've just been small enough that as they grind higher each day the last week, I've just been offsetting them very easily with day trading. And on a day like today, they certainly help things, but very little bear follow through. So I will lighten those up consistently. They're already small at this point, but pretty soon I'll go back to flat overnight. And I look forward to that, where I don't have any longs and I don't have any shorts. At this point, I do still have a little bit of MSOS, and I've got my SPY long-term no touch that I won't touch. I've got my metals position still, but that's about it. So I have significantly reduced what I do hold overnight. All right, I'm done talking. Hope you had a good day. Shortened week this week. 3 more trading days to go. See you tomorrow. Do good things.
Starting to harvest the first of the garlic.
Came out here yesterday morning and was walking around and started to see some little signs of deer. This was just a little wild violet plant that was nibbled. And you can see they came over here and there were a few carrots. Just this tiny little sign that something nibbled that off. And then they nibbled a couple of the beet greens. So I find it fun just tracking them, and I left the gate open because they've never come this close to the house, but it's that mom and baby and they're getting more comfortable. So then I walked over here and just was looking for more signs. And this is a mole tunnel. You're not really going to be able to see it, but this strip here is just elevated from a mole tunneling underneath, and because of that it softened up the mulch enough that I could see a deer implant, and yesterday it was a lot more clearly a deer hoof. But there were no other implants because everything else was hard, compact mulch. But it was just an animal track on top of an animal track. And then walked over here and saw the final confirmation of deer poop. So they wandered on through and nibbled a little bit of everything, which is fine. I'll close it from now on, but I don't mind a little baby deer getting some snacks. Lettuce is getting Dr. Seussy.